Hey everyone, welcome back to Corporate Decoder. Today S.O.B.R Safe Inc just filed an 8K detailing a major pivot, and I am seeing a clear signal for their future direction. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is essentially shutting down its main product lines to preserve cash for a big future deal. Alright, so what we have here is a filing from S.O.B.R Safe Inc dated the 10th of July 2026. This is a current report, often called an 8K, which companies file to announce major events that shareholders should know about right away. The big news in this filing is that S.O.B.R Safe's board of directors has decided to stop making and selling their alcohol monitoring and detection hardware and software solutions. This includes things like their S.O.B.R Check and S.O.B.R Sure devices and their S.O.B.R Safe software. This is all happening very soon, with operations expected to stop by the 31st of July 26. This move is part of a larger plan for the company's restructuring, which they previously mentioned in an 8K filing back in May 2026. They are also getting rid of their corporate office lease and have recently reduced their workforce by 3 employees. These actions are designed to cut down on their yearly operating costs by about $1.2 million. Now, when a company decides to shut down part of its business, it usually comes with costs. S.O.B.R Safe estimates these costs will be around $50,000. This mostly covers things like severance pay for employees whose jobs are ending, costs to break contracts, and fees for closing down their office. However, they warn that these costs could actually be higher than expected. They also mentioned that more costs could pop up that they have not even thought of yet because of these changes. So why are they doing this? The main reason is to save money and hold on to their cash. This cash is needed to finish a proposed business combination with another company called Clean World Ventures Incorporated. This deal was announced back in April 2026. Basically, S.O.B.R Safe is clearing the decks of its current operations to make way for this new potential merger. As with most filings like this, S.O.B.R Safe includes a statement about forward-looking information. This just means they are talking about what they expect to happen in the future. They are saying that things like the costs they expect for employee terminations and the effect of cutting staff might not turn out exactly as planned. There are always risks and uncertainties that could cause the actual results to be different. They point to their other filings with the Securities and Exchange Commission, or SEC, for more details on these risks. They also make it clear they do not promise to update these future predictions. If things change, they will not necessarily share that with everyone. Looking at their stock information, we see that S.O.B.R Safe Inc has its common stock traded on the Nasdaq capital market under the symbol S.O.B.R. This is a key detail as it shows they are a publicly traded company. The company's market cap is currently $3 million and the stock price is $1.20. Their employee count is very small at just 18 people. This gives us a picture of a small company making a significant strategic shift. Recent news headlines show the stock price has been volatile, with one report on the 10th of July saying the stock plunged 45% on the same day this filing was made public. Another headline from the 13th of July indicates their stock was up on news of the cost cuts. This shows the market is reacting to these big changes. Finally, the filing lists the exhibits included. Most importantly, it notes the cover page interactive data file, which is in a format called inline XBRL. This format is used for regulatory filings to make financial data more easily accessible and readable for investors and analysts. Overall, S.O.B.R Safe Inc is undergoing a radical shift. They are exiting their existing business lines to focus on a future business combination. This is a bold move that shows a strong desire to conserve cash and pivot towards a new opportunity. The success of this plan will hinge heavily on the completion of the proposed merger with Clean World Ventures. It is a high-stakes gamble for a small company. The 45% drop in stock on the day of the filing suggests investors are either concerned about the immediate impact of shutting down operations, or perhaps are waiting for more clarity on the proposed merger. On the other hand, the subsequent uptick a few days later shows some players may see the cost cutting as a positive step. It is a classic case of a company trying to survive by making drastic changes. The risk I am watching is whether this proposed business combination will actually happen, and if it will be enough to revitalize the company. What I am actually looking for is more concrete details on the terms and potential synergies of the merger with Clean World Ventures. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. Like this video, comment your thoughts, and subscribe for more. Join our Discord in the description.